Have you ever wondered how your insurance premium is calculated? Well, let's start by getting to grips with what an insurance premium actually is. It's the amount you pay to an insurance company for a policy that protects you against potential loss or damage. This might be for your car, home, health, or even your life. Why do insurance companies charge premiums, you might ask? Well, these premiums are essentially the lifeblood of insurance companies. They collect these payments from policyholders like you and me and use them to cover claims when an insured event occurs. From your perspective, paying these premiums is like buying peace of mind. It's a way to safeguard against financial disaster if something unexpected happens. It's a mutual agreement where we accept a guaranteed small loss, the premium, to avoid a potential large loss. So we now know what an insurance premium is and why it's important. But how exactly is it calculated? Stay tuned to find out. Insurance premiums aren't pulled out of thin air. They're calculated using a variety of factors. Let's break these down. First, the type of coverage you're seeking plays a big role. If you're insuring a sports car versus a family van, your premium will be different. Why? Because the risk associated with each vehicle is different. Sports cars tend to be driven faster, increasing the likelihood of an accident, hence higher premiums. Next, the likelihood of a claim being made is another major consideration. Insurance companies employ a team of statisticians called actuaries. These unsung heroes analyze vast amounts of data to predict how likely it is that a claim will be made. For instance, if you live in an area prone to earthquakes, your home insurance premium might be higher because the likelihood of a claim being made is increased. Thirdly, personal details about the insured are also taken into account. This can include your age, gender, and even your marital status. For example, younger drivers are typically seen as higher risk, and so their car insurance premiums are often higher. Similarly, statistics show that single people file more claims than married ones. So if you're single, you might see that reflected in your premiums. Lastly, the amount of coverage desired will influence your premium. It's simple math. The more coverage you want, the higher your premium will be. This is because the insurance company is potentially taking on a larger risk. If you want your insurance to cover everything from a minor fender bender to a total car replacement, you're going to pay more than someone who only wants coverage for major accidents. Now, it's worth noting that these factors can vary by insurance type and company. Some insurers might place more weight on one factor over another. This is why it's important to shop around and compare quotes. Now that we know what factors influence our insurance premiums, let's dive deeper into how these factors are used in the calculation. Calculating an insurance premium may seem complex, but it's actually a straightforward process when broken down. Let's take a journey through this process using an example. Suppose we have Jane, who is a 35-year-old non-smoker living in a bustling city. Jane wishes to purchase health insurance. The first step insurance companies take is to assess the risk associated with Jane. They consider her age, health status, and lifestyle choices. Being younger and a non-smoker, Jane is considered a low-risk individual. Next, they look at the geographical location. Living in a city can mean higher healthcare costs, so this might slightly increase Jane's premium. Then, they factor in the type of coverage Jane wants. If she opts for a plan with a high coverage limit and low deductible, her premium will be higher. Lastly, insurance companies consider the claim history. Since Jane has never filed a claim before, this works in her favor, potentially reducing her premium. These factors are then fed into a mathematical model that calculates the premium. This model considers the probability of Jane filing a claim and the potential cost of that claim. The higher the probability and the greater the cost, the higher the premium. However, it's important to note that each insurance company might weigh these factors differently, leading to different premium amounts. That's why it's always a good idea to shop around and compare prices. And there you have it. That's how insurance companies determine your insurance premiums. So, insurance premiums aren't as mystifying as they seem, right? We've unveiled that an insurance premium is simply the amount you pay for an insurance policy. Various factors like your age, health, and the type of coverage you choose can influence this cost. And the calculation process? Well, it's not rocket science. It's a careful balance of risk assessment and financial forecasting. So let's keep demystifying these financial concepts together. Please like and subscribe to this channel for more information like this.